Okay, good evening, guys. Welcome back to another Not So Late Night Show. Today, we will be heading to Singapore. And of course, Singapore has been always famed country for income investing. So they have a lot of good financial companies and also a lot of good REITs, but not really that popular or famous for growth companies. But today, there's a Singapore-based company that has actually achieved multi-bagger kind of returns in less than 3 years, to be exact, around 600% in less than 3 years. So of course, the question is, can this company continue to grow the next, 100%, 200%, and continue to grow and continue to create more capital gains for growth investors who want to focus in Singapore? So let's take a deeper look at the business model and then try to rationalize whether it is possible or not. Of course, the usual disclaimer, do not take what we are sharing today as a decision to buy, sell, or hold any position of any shares. Just make your due diligence and further study if you think the company is exciting, and we wish you the very best in your investment returns and journey. All right, so what is this company about, and how can a company like iFAST grow in terms of share price return 600% in 3 years, JuJuR?
Yeah, I think iFAST basically got no correlation with iPhone and so on. It's just a Singapore-based listed company. I think the next slide gives you the overview of what they are doing right now. So basically, they are providing this kind of fintech ecosystem, although they call it that way, but in a simpler term, it's basically a wealth management platform, right? So they are connected to multiple type of investment products, let's say to fund houses, to banks, to stock exchange, and also insurance company and so on. So all this is technically different type of investment products from high risk to low risk, and then connect to their platform, and then they are serving two major type of customer. So you got the one that is actually B2C. If you are not familiar with them, maybe you can check out, let's say, fundsupermart.com, fsm1.com. You will actually know what they are offering for a consumer segment. But of course, their core offering is actually to the B2B, which is targeting all the financial advisory companies, financial institutions, even banks, also one of their clients. So basically, they hold a lot of license in different markets, right? So this actually helps them to be able to serve a lot of customer, from retail customer go to institution customers, right? So as of now, they are inside these 5 key regions. Of course, Singapore is the home ground, and then they also expanded into Hong Kong, China, Malaysia, and also India, right? Of course, I mean, different markets got different maturities. Some offer more products, some still in the starting stage. So I will cover more later. And then, of course, I mean, the next slide gives you a quick glance on what is the number they are having right now. So basically, they have about 12,000 different type of investment product, from unit trust to stocks to bonds and so on. And then, of course, you can see these 12,000 including about 7,800 funds, 1,200 bonds, and of course some of the stocks and ETF, which is mainly focusing in Singapore Exchange, Hong Kong Exchange, and also some stock that's listed in US. So as of the first quarter of the current fiscal year, so they got about 550,000 customers, and then the partner got 460 and so on. So these are some of the numbers that give you how big they are. They are already in the market for quite long. So this is where they start to accumulate up their customer base. And of course, some of it are returning customer, and another part of it are non-recurring, meaning they come here, do a one-off purchase, right? And then maybe the next slide actually gives you some of the information on what they actually do. So this is particularly in the B2B segment. So the most popular one is actually the iFAST Central and also iFAST Global Prestige, which is serving different type of FA companies. And the second one is actually serving the high net worth personals, right? And then of course the third one, maybe it's a little bit small, is actually serving the company. For example, this company got some pension plan for their staff, and then they wanted to actually manage through some internet platform. So this is a solution that provided by iFAST. And of course, the last one is actually iFAST Global Markets. So it's a team of in-house wealth advisor that actually provide some of the services with what is the thing that they, the institution player to invest, what is the products. So these are some of the consultancy services that are provided by them as well. Then moving on to the next one, probably is more related to us. It's a B2C market. So you check out those guys, especially fundsupermart.com. So, and also fsm1.com. This is the one that allow you to have access to multiple investment products in one glance. And then they also got different data that help you to make the decision, a lot of sharing. They also got some annual events. Usually they have in some conference hall, but of course now they might do it remotely, right? So this is serving the retail investor like me and you. Interestingly, they also got this B2B2C solution, which they call it as the iFAST fintech solution. So one of the interesting stuff that they provide is they have this robo-advisor services, but then they offered it in a white label model, meaning anyone can just take their service and then brand it under themselves. For example, JuJuR wanted to open up a robo-advisor services, but then I don't have the tech capability. So I go through iFAST to provide me the full-fledged services. I pay them the IT setup fee and also the IT maintenance fee, and then I can just launch a service in my brand. So this is some of the other thing that's, for me, is quite interesting. It's beyond just fintech services, but it's also IT services. And of course, some of the other thing is the bond supermarket, but it's not significant at the moment, right? Okay, moving on is some of the screenshot on what is their platform. So on the left is the one, FSM1. So you can see there are multiple products. You can check out the latest news, the charting, and so on. And of course, the right-hand side is the one in the web view, also different product they have at the moment. And the next one is actually telling you some of the company or even banks or financial institutions that utilize their service. So these are some of the key clients they have actually put inside their annual reports, but there are more. This is not just, let's say these 12 of them, but there are more. So for example, RHB, CMB, even Tiger Brokers, and so on are using some of their services. So they are quite, diversified in a way, serving a lot of clients. And then the next slide gives you the, for me, it's the most important slide that if you wanted to understand iFAST. So if you check out their annual reports or quarter report, you will always see this short form called AUA. So in the full definition is actually asset under administration, meaning what is the asset managed by them on behalf of, let's say, the retail investor or the institution player. So this is the reason why they can actually show a very good stock performance, because their group AUA actually grew 68.9% year on year. So you just compare the current year versus the last year is, for me, it's a very impressive result. I think they are one of the very few companies that benefited due to the pandemic. So because of pandemic, a lot of people need to actually, let's say, usually they will go to bank or go to some agents to manage their wealth. But now, because of pandemic, they got locked down. So this is the go-to platform because it's quite convenient, and then they can offer you the service. That's why you can see B2C, which is highlighted in red, grow quite significantly. And of course, this is the combination view for both B2B and also B2C segments, starting from the early 2000s, which is where they started, and then fast forward until now, the first quarter of 2021. Okay, and then moving on is another key indicators that you should always monitor. What is the net inflow of fund go into their unit trust subscription or whatnot. So of course, 2020 is the year that draw in a lot of money from investor, be it B2B or B2C. So this is why they are able to make some money out of it, because ultimately they offer the services, the management services and whatnot. Is it usually tied to the number of net inflow. So the more money you manage, the more fee you can charge. And then of course, once you are with them, the service is good, you will be you stick to them. So this is why I think right now this studio has set up quite a good base. And of course, they are not satisfied within their home ground or even Malaysia, but they have moved beyond this Southeast Asia region to serve more clients. So the potential is still there. And then it's something that we can look forward to. Right. And then, of course, the next one gives you some of the breakdown, be it by market and also by the products. So, I mean, of course, by market itself, Singapore is still the largest market, followed by Hong Kong, Malaysia, and the rest, which is China and India. Especially China is just starting. Right now, they only offer unit trust product, so not the ETF, not the bonds, and so on. So China, for me, if they're able to crack into this region, the potential is huge. So these are some of the things that we can keep an eye on, because for me, Singapore probably is a bit saturated. It will still have some space to grow, but then China is the one that may be able to bring a lot of impact in the coming years. And if you talk about the breakdown by product that under their administration, majority still goes under unit trust, but there's expanded to offer the stock and ETF, bonds, and also some of the cash account. So this is something that you should know or understand from for this company called iFAST. And the next slide actually gives you some of the information on how they make money lah. Yeah, I manage your money. Great. So am I able to charge a lot? And what is my margin and so on, right? So basically they break into two parts. So there is one thing called the non-recurring net revenues, meaning you buy the thing one-off, you buy unit trust one-off, they charge you, let's say 5%. Then this is the thing part under the transaction fee. And of course, if the transaction that you have made is crossing the border, and of course, some of the conversion in Forex, they will take a cut as well. And like what I mentioned in their B2B2C solution, where they provide the, let's say, robo-advisor solution to some of the company, they're able to get a one-off IT development fee. And of course, if they sell some of the insurance product, they'll get a commission. On the other hand, they also got a lot of recurring customer, meaning some of the FA or financial advisor company that actually use their services. They need to pay for the platform fee, rep fees, and so on. So in short, the key indicator is always linking back to this AUA. How many assets managed under them got technically the direct correlation with their revenue and subsequently to their profit. So what the fee is all about. So the next slide actually gives you a deeper glance, a deeper look into how iFAST is charging. So, different party pay a different type of fee. So this, I think, give a very good illustration from 5 different parties. Of course, fund houses are the one paying them the trailer fee. And then you got the B2B customer, for example, banks and financial institutions. Because they use their platform, they need to pay the platform fee, upfront fee, and also rep fee. And for B2C, if you subscribe to their platform, of course, you need to pay for the platform fee. And the rest is when it happens during the transaction, the Forex conversion, and for other IT solution that they provide, they also will charge the service fee. So this is the 5 key parties that are paying them the revenue, and then this is the different type of fee they are able to charge. Okay, so in short, iFAST is a wealth management company that earn money by managing investor fund. In short, so they are just like the caretaker, like your nanny. So you also pay your nanny a fee, and then of course, the more baby the nanny handle, as long as it can set up a system to actually manage the baby well, hire the right the right people to manage the whole thing, they will be able to actually grow the business from time to time. So it's limitless, right? Because they haven't even expanded beyond the Oriental world. So they're still very focusing in the Eastern world. So there are a lot of potential, in my opinion. But of course, all this is just the background of iFAST from their business perspective. So how are they doing from all the financial numbers? I'll pass it to Jupan to continue sharing more information about iFAST.
Okay, thank you, Junbei. So I think from the business point of view, it's very exciting to see such a company available for investors who maybe just want to invest in Singapore only, right? So, and it has been proven to be a multi-bagger. So, of course, if the business model is good enough, the financial info will justify that the company is growing tremendously. And of course, due to that rationale, retail investors or even other institutional investors who want to also participate in the growth of such a wonderful company. But before we go into the financial info, just a little shout out to what we are currently offering as a premium service to people who want to learn more about investing. So we do have a subscription service where we offer you an invitation to our Facebook group where we will really discuss on stocks, not just in Malaysia, Singapore, but also around the world, including China, Hong Kong, and the US as well. Of course, there will also be similar but more in detail monthly private sharing session to our subscribers with our premium club. And of course, to those who have joined us or are aware, have been with us since the early of the year, we have actually put out 10 stocks that we actually are confident of for 2021. And for 2022, this whole exercise will also continue as well as part of premium club services. Of course, there will also be premium stock analysis and also articles as well. So we do have a variety of channels and mediums to share our investment analysis. So this is actually one of the few examples of what we did for our sharing, which is investing in China by giving premium club members a more basic approach of how China is and how to actually get started in investing in China. And for the articles, we do have a very deep dive analysis on companies in US and also in Malaysia as well. And of course, since investing involves understanding and getting deep into each segment or each ecosystem as deep as possible before you actually pick up a potential investment candidate, there will be what we call thematic kinds of topics where we will deep dive into certain sectors and find out which companies are the more suitable candidates to actually take and participate in their growth. So of course, the upcoming one will be semiconductor, where we will actually be holding the event on the 24th of July at 10 a.m. So this is just a snapshot of what we will be covering, the entire semiconductor value stream from the IDMs to the fabless to the pure play and also to the packaging companies. Right, so let's get back to the numbers of iFAST. So straightforward, we can see that this is a company that has been growing really well from fiscal year 2017 up to fiscal year 2020, the full fiscal. You can see that actually they have actually gone past more than 50% growth rate within 4 years of operating fiscal year. Now, of course, if we just look at first Q of 2021, it's also considered a very good first quarter results already. So even if they stop the growth rate, it is expected that the 2021 fiscal year performance will actually still exceed what they actually achieved in fiscal year 2020. This company is actually one of the winners due to the pandemic striking and impairing a lot of other businesses. But when it comes to businesses regarding to tech, regarding to wealth management, and a combination of tech and also financial, they actually did pretty well for fiscal year 2020. And of course, since it's just setting up a platform, ensuring the platform, the system is running well, the more subscribers, the more participants, or the more customers you get to switch on board to your ecosystem, generally speaking, it will actually see your profit rise even faster than your revenue growth. So you can see that even though we said just now revenue growth was around a little bit more than 50%, but if you look at the profit after tax, which was just 7.49 million Sing dollars in fiscal year 2017, it actually went up to 21 million in fiscal year 2020. So it takes around 300% of jump, right? So this is a company where the business model is asset-like. The more subscribers they get on board, the more participants they can actually convince them to switch aboard, will actually see the net profit or the profit after tax rise very fast. Of course, they do also need to justify, like in terms of operating cash flow is also coming as well. So you can see that this company also have a very good quality of earnings. The operating cash flow is always more than the profit after tax. So you can see that company is actually raking in a lot of cash, and this is where the company would justify itself whether to actually put in the cash generated from operations to invest further, or also to pay out as a dividend. But in terms of dividends, you can see that it's pretty flattish. So the company is more poised towards a growth strategy, which is to expand to other countries and maybe also offer more and more related services as well. Of course, you can see that the profit before tax margin is actually on increasing trend. So it's a very lucrative business. Basically, they are one of the more the bigger market leaders within this business model, and hence due to that, whenever they actually grow their net revenue, they can actually boost their profit before tax margin even higher. So you can see that 2020 was a good year where they actually hit 30%, but even coming to first quarter of 2021, it even surged up higher to 36.1%. So this is a company that you can see that have a very huge operating leverage when it comes to managing its business. And of course, what Chun Bing said just now is that when you actually look at how the business is positioning itself, once they get customers or even clients to switch over to their platform, there will also be a recurring fee to continue to subscribe, utilize iFAST offerings and services. So once these customers stay happy and stay satisfied with the quality and services that iFAST is providing them, then they will be also very willingly to pay the required recurring kind of subscription or payment to continue using iFAST services and products. So you can see that if the asset under administration continues to grow, it will also make the revenue or from the recurring side also grow as well. And of course, time to time, there will also be some kind of growth also in the non-recurring, but not as much as the recurring revenue. And of course, looking at the growth rate, right, you can see that the company has actually been growing very steadily, and in fact, very promising as well for a Singapore-based company, right? So you can see that total net revenue has been growing at around 20%, 21%, and of course, coming to fiscal year 2020, it even went up to as high as 32%. And of course, first quarter of 2021, where things kind of returned to normal, especially for Singapore, and maybe the emphasis on so-called wealth management has actually intensified as well. Hence, you see that in terms of growth, the company actually accelerated much more faster during fiscal year 2020, when it was the pandemic, right? So it's a very surprising and eye-catching company from a growth investing perspective, and actually have it available in Singapore. And of course, moving on to the geographical segment, we've mentioned that this company started off as a Singapore-listed company. The main stomping ground is Singapore, but eventually they also ventured out of Singapore and went into countries like Hong Kong, Malaysia, and China. And you can see that the major contribution still comes from Singapore, but there's also a healthy growth trend for the other expanding countries like Hong Kong, Malaysia, China, and the total group actually risen and improved because all the improvement from the respective countries contributed to the company's stellar growth as well, right? Of course, one thing that Chun Bing also highlighted just now is that of all the countries, even though everything is already profitable, China is one of the regions where they have just started venturing into and is just only targeting unit trust products. So in terms of product offerings, they might need more time to qualify and offer different kinds of products and services, and hence it's still at the loss-making side. But rest assured that other profitability from the other countries are very, very much desirable. So Singapore and Hong Kong and Malaysia have been showing improving and even increasing kind of profitability for the past few years. So, of course, such a wonderful company and such wonderful figures would mean that the company will never ever come at a cheap price. So taking a look at the valuation of the company, you can see that it is currently trading at 88 times or 89 times PE ratio. So this is a company where currently a lot of emphasis and a lot of so-called potential growth prospect have been put into the company, and hence jacking up the price to earnings ratio to such high lofty valuation. By the end of the day, it's up to the investors to actually take a view of whether the price as it is today is actually old price, or there is still a further and longer runway for iFAST to continue to grow as well. So basically, for my perspective, this is a business where if they continue to dish out good products and services, the existing clients and customers are happy, they'll continue sticking back with iFAST, and there will be a continuous recurring income as well. And of course, not being very satisfied with just having the business in Singapore, they also ventured to Hong Kong, Malaysia, and particularly I like it when they went into Hong Kong, because now by having Singapore and Hong Kong as their main base, and both countries and both cities are actually financial hubs, is actually a plus point to actually have a presence in such countries and cities. And of course, it also doesn't also come cheap from the price to cash flow perspective as well. So as of now, it's trading at around 51 times price to cash flow. And of course, it doesn't also make sense to actually evaluate the company based on the price to book ratio, because the earning potential and earning prospects and the exciting potential of the company is actually pushing the price so much high up that by gauging the company or pricing the company against the asset it has on hand, is definitely going to be a value too big for big value investors to swallow. Right. I think I've shared my verdict. Maybe I will pass it to Chun Bing to see his opinion whether iFAST is expensive as of now, or it is okay to be so bullish on the prospect of the companies, judging by the profitability and the business model.
Yeah, for me, I think one of the key driver to the high PE behind is, of course, continuously a few quarters, they are showing a very good growth percentage. And on the other hand, there is a China prospect into it. When China, if they're able to take off, a lot of people are putting a lot of high expectation. But of course, as of now, it's for me, it's like a continuously 5 quarter keep on pumping up the kind of expectation, meaning every quarter go up. Right. For me, I believe pandemic definitely is a booster. While everything start to back to normal, and I'm not sure whether this will have a slower. It will slow down the entire thing, especially for the Southeast Asia region, because banks started to open up. different agent will try to grab the business back to them. So for me, I will probably take a step back, try to monitor further. But of course, two key things that you should definitely check on it is the China staff. If they're able to tell you the next plan is actually bringing in more products, not just unit trust. So this is the time that you should actually have confidence that the revenue might boost. But of course, inside their presentation for the latest quarter, they did mention China will continue to be at loss because their current focus is to bring up their brand awareness. So don't expect China the next quarter suddenly become positive. It is not likely to happen, and it might continue for maybe another few quarters before it start to turn their strategy into profit making. So this is some of the information to take note. Don't just think that they has been losing for a few years to quarter. Now they wanted to actually turn it into profit. No, they still wanted to build up the brand in China first.
Yeah. So, okay, I think this is a company where I think in terms of potential, there's really little doubt that things could go wrong for the business side of iFAST. But when it comes to valuation, there will definitely be two sides of the camp, right? So there will be one side that says that, okay, yeah, I mean, there is still room for growth, hence there is generally higher expectation, hence the higher valuation. Of course, there's also another side of it where things might change when iFAST gets into an economy that's reopening and there are more other alternatives to invest into wealth management products rather than going through iFAST. But let us know in the comment section below. Do you think that iFAST still has the room to continue to grow, or that current valuations are too high, and you should actually be wary of correction that is bound to come? Let us know in the comment section. And of course, if you like our sharing session and you want us to actually touch on other companies as well, let us know in the comment section also which company that you want us to touch base in our Not So Late Night show. But that's it for today. We hope that you enjoyed the sharing session, and we'll see you next week for another company for our Not So Late Night show. Take care. Bye-bye.